Bitcoin just face planted again, and half the internet is acting shocked. Don't be. This movie runs on a 4-year loop, and we're right on cue. Every cycle, it's the same choreography: euphoria, narratives, leverage, then gravity. And here's the part nobody wants to say out loud: this doesn't end today. If history rhymes the way it always does, this drawdown can keep grinding. Ugly, boring, soul-sucking, into October 2026. Yeah, I said it. Now, before the comments light up, breathe. I'm not talking about a straight line down. I'm talking about the long bleed, lower highs, false hope rallies, liquidation wicks, then disappointment. Again, that's the cycle. Bitcoin has a habit of humiliating the maximum number of people at the maximum moment of confidence. Every 4 years, like clockwork. Let's rewind. After each halving cycle, Bitcoin rips. Retail floods in late. Institutions pile on leverage. Everyone decides this time is different. Then the unwind starts. And when leverage comes out, it doesn't ask permission. It doesn't care about your thesis. It just sells. What you're watching right now is not a black swan. It's not a surprise. It's post-mania detox. And detox is never pretty. Here's what most crypto commentary gets wrong. They treat Bitcoin like a religion, or a tech stock, or a revolution that can't go down. Wrong. Bitcoin trades like a liquidity sponge. When liquidity is cheap, Bitcoin inhales it. When liquidity tightens, Bitcoin pukes it back out. And guess what's happening now? Rates are high. Liquidity is selective. Risk is being repriced. That's not bullish for leveraged assets that depend on constant inflows to stay vertical. Now let's talk about timing, because timing is everything. Historically, Bitcoin doesn't bottom when the pain starts. It bottoms when hope dies, not when people are scared, when they're bored, when they stop watching, when volume dries up and nobody cares anymore. That's usually late in the cycle, not early. And if you look back, really look, those lows tend to show up months after the initial crash, not weeks. Which brings us to my hard take. I think Bitcoin continues to slide, chop, and disappoint into October 2026, just like prior cycles. Not because Bitcoin is dead, but because markets need time to clear leverage, reset psychology, and punish impatience. This is where the tourists leave. This is where influencers disappear. This is where conviction actually gets tested. And here's the line nobody wants to hear. The best long-term opportunities are born when the commentary gets quiet, not loud. Now, a quick reality check. This is not investment advice. I am not your financial advisor. I don't know your risk tolerance, your balance sheet, or your blood pressure. If you're making financial decisions, talk to a qualified professional who understands your situation. What I'm giving you is market structure, history, and pattern recognition, not a trade ticket. If you're over-leveraged right now, that's not a market problem. That's a position sizing problem. If you're panicking because price is down, that's not volatility. That's expectation mismatch. And if you're being told, just buy the dip, by someone who makes money on clicks, ask yourself one question. Are they managing risk or farming engagement? Because markets don't care about your timeline. They care about liquidity, leverage, and patience. Here's what I'm watching next. 1. Leverage flushes. When forced selling slows, you're closer. Not there yet, but closer. 2. Volume apathy. When rallies stop exciting anyone, pay attention. 3. Narrative fatigue. When even Bitcoin Twitter gets tired of talking about Bitcoin, that's when things actually get interesting. Until then, expect volatility. Expect fake rallies. Expect pain. And above all, expect the market to keep doing what it always does: humble the crowd. If you want straight talk instead of hopium, subscribe and hit the alarm bell, you bitch. This is where the real market story lives. And no, it's never as comfortable as people promise. I'll see you in the next one.